Southeast Asia is no longer just an emerging market story. It's now a region where serious, long-term investors are turning their attention. With dynamic economies, expanding consumer markets, and increasing financial transparency, Southeast Asia in 2025 presents a compelling case for dividend-focused investors. What makes this region particularly attractive is the combination of relatively low market valuations, stable economic growth, and generous dividend payouts, especially in sectors like banking, telecom, energy, and infrastructure. As central banks stabilize interest rates and inflation begins to ease globally, dividend-paying stocks are once again becoming the preferred choice for those seeking both passive income and long-term capital appreciation. Let's begin with Singapore, the financial heartbeat of Southeast Asia and home to some of the region's strongest dividend stocks. Leading the pack is DBS Group Holdings, the largest bank in Southeast Asia by assets. In 2025, DBS is offering a dividend yield of over 6%, supported by record-breaking earnings and a strong net interest margin, thanks to higher lending rates and low default levels. But what really sets DBS apart is its conservative management, its regional presence across Asia, and its commitment to digital innovation, making it not only a safe dividend stock but also a growth story in disguise. Alongside DBS, Overseas Chinese Banking Corporation, OCBC, is another gem, offering a stable yield of around 5.8%. With strong capitalization and diversified revenue streams, OCBC continues to attract income-seeking investors from around the world. Singapore's dividend space isn't limited to banks. The Singapore Telecommunications Limited, Singtel, has made an impressive turnaround by expanding into data centers, 5G infrastructure, and regional telecom partnerships. Despite competition in the telecom space, Singtel's strong dividend yield of 5.5% and its predictable cash flows from subsidiaries in Australia and India make it a defensive yet rewarding asset in today's volatile environment. For those seeking exposure to real estate, CapitaLand Integrated Commercial Trust, CICT, and Ascendus REIT are excellent choices. With dividend yields above 5.7%, these real estate investment trusts offer stable income supported by high occupancy rates in commercial and industrial properties across Singapore and beyond. Now let's shift our attention to Malaysia, where Maybank, Malayan Banking Berhad, continues to dominate as the top dividend-paying stock. With a dividend yield close to 7% in 2025, Maybank is popular among both retail and institutional investors. It has a wide moat, strong Islamic banking operations, and consistent earnings even during economic slowdowns. Another standout performer is Petronas Gas Berhad, a natural gas infrastructure provider. Despite the global transition towards renewable energy, Petronas Gas maintains long-term contracts that ensure consistent cash flows and a dividend yield around 5.8%. Malaysia also offers opportunities in the plantation sector. Companies like Kuala Lumpur Kepong Berhad and IOI Corporation are known for strong dividend histories tied to global palm oil demand. Moving to Indonesia, the region's most populous country and fastest-growing economy, we find stocks with exceptional return potential. Bank Rakyat Indonesia, BRI, is perhaps the most reliable dividend stock in the country. Specializing in microfinance, BRI has expanded its rural banking network aggressively and seen record profits in 2024 and early 2025. Its dividend yield now sits around 6%, and its growth runway remains wide open. Telkom Indonesia is another powerful name. As the nation's largest telecom operator, it has benefited immensely from digital transformation, rising internet penetration, and the growth of cloud services. In 2025, it offers a dividend yield of about 5.5%, which is considered highly attractive given its growth profile and state support. Thailand has traditionally been seen as a more conservative market, but it offers strong dividend players with regional relevance. PTT Public Company Limited, the country's flagship energy company, is a reliable source of dividends with a current yield of 6.2%. Even as it pivots toward cleaner energy, PTT's traditional oil and gas operations continue to generate strong profits, supported by global demand and strategic investments across ASEAN. Another attractive stock is Bangkok Dusit Medical Services, BDMS, Thailand's largest private hospital operator. While its dividend yield is lower at around 4.5%, it offers consistent growth backed by medical tourism, aging demographics, and rising demand for quality healthcare across the region. Now, looking at the Philippines, we find opportunities in both utilities and consumer sectors. Manila electric company MERALCO remains a top dividend stock in the country. As the main electricity distributor in Metro Manila, it enjoys a near monopoly with consistent demand. Its dividend yield, which hovers around 6%, is backed by strong cash flows and government-approved rate structures. Meanwhile, SM Prime Holdings, the property and mall giant, offers a yield of around 4.5%. While slightly lower, its earnings growth potential makes it attractive, especially with the expansion of new residential projects and the resurgence of physical retail post-COVID. Beyond individual stocks, many investors are also turning to REITs and ETFs that focus on dividend-paying assets in Southeast Asia. For example, Ascendus REIT, which holds logistics and industrial properties across Singapore, Australia, and the UK, continues to pay a stable dividend of nearly 5.7%. Likewise, CapitaLand Ascot Trust, which focuses on hospitality assets, has benefited from the region's tourism recovery and has restored its dividend payouts to pre-pandemic levels. What makes dividend investing in Southeast Asia so compelling in 2025 is the combination of long-term structural growth with near-term income potential. These are not just high-yield stocks in stagnant markets. These are companies growing with the region, supported by infrastructure development, rising consumption, and digital transformation. Moreover, many of these companies are operating in regulated or monopolistic sectors, reducing downside risk for income investors. In conclusion, the top dividend stocks in Southeast Asia today offer a rare combination of high yields, business resilience, and long-term growth. From dominant banks like DBS and Maybank to energy giants like PTT and Petronas Gas, to digital leaders like Telkom Indonesia, these companies form the backbone of Southeast Asia's economic engine. For investors seeking financial stability and reliable cash flows in 2025 and beyond, Southeast Asia is not just an option, it's a smart move. But as always, investors should do their own due diligence, assess the local currency risks, and diversify across sectors and countries for a truly balanced income strategy.